Right, hello and welcome to Camel Finance. I'm your boy Camel, and today I want to talk a little bit about staying ahead of the curve. Okay, because frankly, we, and I say not just me, as in the community, the viewers, have managed to stay quite far ahead of this curve for some time now. And I want to talk a little bit about that, and I also want to talk a little bit about some principles to ensure we continue to stay ahead of the curve. This melt up chart here has been the staple of this channel, and back here everyone was calling 2008 style crashes, and everyone's favorite fractal on Twitter was the 2008 plunge back here and here. And we have had to shift the goalpost a few times. We thought the top would come much sooner and it didn't, and we had to shift it over, and we thought the top would come sooner and we didn't. But overall, the expectation was that we would break out, we wouldn't have a 2008 style meltdown, and instead we would run to all-time highs. And now here we are, right? Here we are. All of this move, of course, was conceptualized based on an idea that we were swinging from a highly inflationary environment to a deflationary environment. And I wanted to point this out, right? Because like I said, we have been ahead of the curve, and this is not me saying this so I can tell you, I told you so, right? Or I was right and everyone else was wrong, or, Camel called this is Camel's idea. It's nothing to do with that. What it's to do with is, as a community, we have been ahead of the curve. So what I mean by this is, when you watch my channel, you take on board my opinion idea, but you're not just accepting that for gospel, right? You don't just take my idea and go, well, that must be right, and I don't need to look anywhere else, right? I'm sure what you do is probably go and watch another 9 or 10 channels, and you hear everyone's opinion, and then based on all of the evidence that you've seen, if you're smart at least, you come to your own conclusion, right? Copying me or anyone is not going to get you very far in this game. You need to understand what you're doing. You need to have your own ideas. And whilst many people in this community agree mostly with my idea or concept or with parts of it, nobody agrees completely, right? Nobody is sitting there going, exactly what Camel thinks is what I think. Everyone has their own kind of ideas or adaptations. So whether you think that the peak comes sooner than I do or later than I do, whether you think that the bust won't be as severe as I think it will be or worse than I think it will be, whether you think cuts come sooner or later than I do, generally speaking, this community has been aware of a few things, right? We were aware that at the bottom, everyone was too bearish. We were aware that at the Bitcoin bottom, we weren't going to 12 or 14K like many people were calling for. We were aware that once we were at 25K and everyone was bearish, the thing to do was to be bullish until we lost 25K, which of course we never did. Moving on to inflation, we were well aware that we would come down from inflation much faster than most people thought we would. We were also at least open to seeing deflation, even if you were in that camp of people that didn't really think deflation was possible. And so again, I point at this, not to say I was right and Rao was wrong. It's nothing to do with Rao, okay? In fact, Rao has been quite consistent in saying he thinks we see 0 or near 0 CPI this cycle. So this is nothing to do with Camel versus Rao at all. This is just for illustrative purposes to say, have you also noticed on your Twitter feed is a whole heap of people now pointing at inflation and saying, wow, maybe we could see deflation, right? Only once we get a one handle on the trueflation print do people start to entertain that perhaps CPI is not sticky, that perhaps we could even see deflation, which again, it speaks to being ahead of the curve here. Something else we're seeing an awful lot lately, and again, I'm not saying Arthur was not ahead of the curve. That's not what I'm saying, okay? This is just for illustrative purposes. But notice how, again, on this channel and in this community, we were talking about the BTFP before anyone. Remember, markets have very short memories. Going way, way, way back to when they first launched BTFP, on this channel and in this community, we were aware of something that the rest of the market wasn't. Again, we were ahead of the curve because we knew that this was QE in disguise, right? We knew that this was a hidden liquidity. And remember, if you cast your minds back then, the thing you kept hearing from every man and his dog was markets can't go to all-time highs. The melt-up chart has to be wrong. Bitcoin has to continue lower because where's the liquidity going to come from? Right, that was the catchphrase everyone was using. It was don't fight the Fed and where's the liquidity going to come from? And again, we managed to stay ahead of the curve here by understanding that the liquidity had been hidden in different places. We had QE that didn't identify as QE. We had QE that identified as a loan program. We had the reverse repo. And then later on, we had it disguised again by being hidden on the FDIC balance sheet instead of the Fed balance sheet, right? We were paying hide the bailout. So again, we managed in this community to stay on the right side and to stay ahead of the curve. We understood that this was where the liquidity was going to come from before people even understood that this was liquidity at all. And again, to reiterate this point, this is not me trying to say Camel knew it all, right? I didn't know, I never know, I still don't know anything. But as a community, we were able to stay ahead of the curve because of following a few principles. because we didn't marry any idea, because we stayed open, and because we took things one day at a time, right? Nobody sat in this community and said, I know exactly what's going to happen. Nobody in this community married news narratives. And of course, fast forward to today, now we're seeing everyone talking about the BTFP like, uh-oh, this thing's going to run out on the 11th of March. What are we going to do? And again, I'm not saying Arthur Hayes is late to this party. That is not what I'm saying. He may well have been ahead of this game the whole time, right? He may well have been ahead of even us. But if you go through your Twitter feed, you will find a whole heap of people now that are late to this idea, right? That are late to the idea that BTFP ends in March, when this is something we've been looking at for months and months and months. And so with all that said, again, I want to reiterate one last time. This is not me saying Camel was ahead of the curve, okay, and everyone else is here along for the ride. That's not what this is, because all of us have contributed something, right? Again, unless you're one of the small handful of people that just show up here to copy my trades, and of course, those people are just going to get wrecked, right? Because if you don't know how to manage risk and you use too much leverage, you know how Sod's Law works, right? If you're too lazy to do any work and understand what you're doing, then you'll just copy my trade. The one you copy will be the one that stops out, and then you'll blow your account up. Well, I don't even notice it, right? So I'm not talking to those people that are lazy. I'm talking to the people, everyone else that comes here, that contributes constructively, that goes and watches a bunch of other channels, that goes and does their own research and then comes to their own conclusion. And I know that makes up the bulk of you, because I speak to you almost every day, back and forward in comments. Doesn't matter what I say, someone will say, oh, I kind of agree with this, but I disagree with this, right? And that's absolutely fine, because none of us actually know what the hell is going on, right? But as a community, we have done really well at staying ahead of the curve. We have been able to call bottoms in markets. We have had the expectation that the market would run to new all-time highs, and it did. Bitcoin still has a bit of catching up to do. Maybe that turns out to be one of the calls that we're wrong about. But overall, right, like I said, this isn't about me being right or anyone else being wrong. This is simply about, by abiding by a few principles, it is indeed possible to stay well ahead of the curve. And those principles are: admit that you don't know anything, okay? The sooner you admit you don't know what will happen, the sooner you are liberated from the stress of trying to predict something that is by definition chaotic and random. Also, by taking things one day at a time, it's much easier to stay ahead of the curve than you might think. And you might think, well, how can you take things one day at a time, but still stay ahead of the curve? And the answer is simple. If you take this whole idea of the left translated Bitcoin cycle versus the right translated Bitcoin cycle, okay? Now, I believe the average market participant thinks that the right translated 4-year cycle is just going to repeat and nothing is ever different, and there's no need to try to think differently because we look left and that's what it's always done, right? All 3 times before, it just went 1 year bear market, 3-year bull run, 1 year bear market, 3-year bull run. So this level of thinking, it violates principle number 1, doesn't it? Right? Admit you don't know. Well, apparently you do know. Apparently you know the top's going to come next year at the end, and then we're going to have a 12-month bear market, right? But also, one day at a time. Well, if we're taking it one day at a time, this is not yet invalidated, is it? And if we continue to take it one day at a time, then at some point, we'll get that third line of attack, we'll sell the trend line breakdown, and we'll be out of the market. And so by taking it one day at a time, we're out here. Meanwhile, everyone else that's not taking it one day at a time, because they haven't admitted they don't know, they are still looking at this and going, yeah, well, I know what comes next. Another 12 months of bull run. Okay, so this one day at a time principle is very, very powerful. And by taking it one day at a time, we are actually able to stay ahead of the curve on these things. Again, it's the same with, we can use the same principle for CPI, right? The idea, the expectation was that trueflation would come down with CPI. We would see a sideways consolidation and a next leg down. Now, by taking it one day at a time, we didn't know. In here, we're like, whoa, is it going to show up? Is it going to show up? Is it going to show up? And then eventually it shows up, right? And it continues to check off our narrative. It continues to fit with the idea, the hypothesis. But for everyone else, that 1, thinks they know what's going on. Oh, inflation is sticky. This is what comes next. And 2, refuses to take it one day at a time and be open to both up and downward moves in CPI. They're all caught wrong-footed. And that is why it goes back to that slide I was showing you with Rao, where, you know, all of a sudden CPI has got a one handle on it and every man and his dog is now shouting, oh, maybe inflation won't be sticky. Oh, maybe deflation is actually possible. And again, it comes back to people fail to admit they don't know anything and they fail to take things one day at a time. Something else that is hyper critical to being able to stay ahead of the curve is abandoning the need to be right. If you need to be right or wrong in trading, then you are only in for a world of pain. Okay, and you can see this, and I see this as somebody that posts things to Twitter, right? There's 2 types of people that respond. If I, for example, post, I've gone long on the S&P 500, there'll be two types of responses, assuming the people don't agree with me. There'll be the type of person that actually makes money in the market and doesn't have a need to be right. And their response looks something like this. Hey, Camel, I disagree. Here's my analysis. Here's why I disagree. Right? This is a person that doesn't need to be right. This is a person that just has a difference of opinion. Versus when I say to Twitter, Camel's just gone long the S&P here, there's always somebody that needs to be right about their opinion and needs to prove me wrong more than they actually care about making money in the market. And that response looks like this. No, wrong, it's going down. Okay? And again, it feeds back into this loop, doesn't it? Admit you don't know? Well, apparently they do know. Apparently they know it's going down. Even when I say I'm long the S&P, I don't know if it's going up. Okay? I'm just buying a breakout that could well fail. Number two, one day at a time. I'm long until such time as I'm either stopped out or we can set a trend line and use that as our line in the sand. Whereas the person that's saying, no, wrong, again, are they taking it one day at a time, or do they already know the future? Have they already made up their mind that what comes next is the S&P to move down and Camel to be proven wrong? And so it goes back to this thing, number 3, right? Abandon your need to be right. The sooner you realize that it's not about being right or wrong, it's about being able to react to an ever-changing market, the sooner you're going to do better at trading. If you're one of these people that needs to prove people wrong online, or needs to point at people and say, ha, told you so, ha, you were wrong, you said long and strong and it went down, then you might as well just fly a flag to say you've never made any money in markets. This is trading and investing. You're going to get things wrong all the time. But as I have proven since I've had this channel, you can get things wrong and still make a bunch of money. Okay, you don't need to get everything right. And in fact, you are never going to be able to get everything right because there are so many elements of chaos and randomness associated with the market. Building on point 3 one last time, if we go back to this idea of the left translated versus the right translated cycle top for Bitcoin, I have no need to be right. So I don't care if the top is left translated or right translated. And I've said it multiple times. I would rather be wrong. I would rather be wrong about this and see a higher number for Bitcoin in a right translated cycle top that is easily identifiable, much easier to get out at the top at, and will give me a higher return. I would much rather have that and be wrong than have a left translated cycle so that I could sit here and say, ha, told you so, right? So you need to get rid of this idea about having to be right or having something to prove. And you can always identify the rookie traders in the crowd, because the ones that need to be right, the ones that are saying, ha, told you so, the ones that for some reason think being right or wrong has some kind of meaning in markets, that is always the sign of a rookie that doesn't make any money. And number 4, my final tip for staying ahead of the curve is to put in the work, okay? Don't just copy a camel on the internet that admits every day he doesn't know a single thing. I know absolutely nothing, okay? So don't copy me. Put in the work. Don't be lazy. The universe has a way of rewarding people that go through pain and suffering and continue to work hard. It has a way of punishing people that think they can freeload. So put in the work, put in the time, put in the research. And not just in the charts and not just in the markets, but go through these principles, okay? Do the introspective work required to make sure that your ego's not telling you need to be right or wrong. Your ego's not telling you know something that is by definition unknowable. And once you've put in the work, come up with a hypothesis. Now, it doesn't matter if that hypothesis is correct or not. Again, do you need to be right, or do you just want to make money? Okay, are you pretending like you know something when you by definition can't know it? Are you pretending like you don't need to check things every day, one day at a time, because you already know the answer? Come up with a hypothesis and just use it as a framework. Does the market behavior, does the price action, does the way the market is moving fit inside of my hypothesis, right? Is my idea invalidated yet? Define your hypothesis, figure out where invalidation occurs, and then sit there with it until the market proves you right or wrong. And the last point, of course, test it daily, fits back into this narrative, this idea, doesn't it, of one day at a time. And if you really think about all of my work, the reason we've stayed ahead of the curve the whole time is because all 4 of these principles have been followed every single day. Every day I come here and I admit the only thing I know is that I don't know. Every day I come here and I say one day at a time. Maybe tomorrow's the day we get proven wrong. Every day I come here with no requirement to be right. Okay, left translated cycle, fine. Or hopefully the thing fails, I get proven wrong and we get a higher top and everyone gets to benefit from a much easier sell signal. This will be so much easier, not just because we can use the 3 trend lines, right? But because we know a 4-year cycle low is due. So we can count the number of weeks and say that's almost certainly the top from a timing perspective, and then we use the trend lines as confluence. If we're having a left translated cycle, we don't have that time advantage. because there's nothing to say that if we get a left translated cycle top, we don't end up selling this only for the market to come down and then rip higher and end up forcing a right translated cycle anyway. And of course, the issue here is we will have to respect this breakout, not knowing whether it indeed goes on to new highs or whether that turns out to be a fake breakout and it rolls over again. So I don't need to be right. I just want to be on the right side. Like I said, I put in the work, okay? There's a reason I can do what I can do, and it's because I've put in nearly 40,000 hours into markets. That is what it takes. That's what you're up against, okay? People that ruthlessly work because they love the craft. And upon applying all of these principles, I can use them to come up with a hypothesis. Again, the hypothesis doesn't have to be right. It just gives me a frame to say, is the market still doing what I thought it would do? And if the answer is yes, then we go one day at a time and we see what the market will give. If the answer is no, we've fallen outside of the framework, well, now it's time to say, okay, time for a new hypothesis. And we continue to test it every single day. And so these are my principles for staying ahead of the curve. It is possible to do so, right? And I believe we will continue to do so. And so long as you start to practice these, so long as you can really internalize these and do the work required to stop trying to prove people wrong or prove to yourself that you know it all, as soon as you can get through this, then it is indeed possible to stay on the right side of the market for extended periods of time. And it becomes almost impossible to lose, okay? Because think about it. If you're holding yourself to this account where you say right translated cycle or nothing, and then we get a left translated cycle, well, now you've lost. Now you were flat wrong. Now you've lost. Now you're a loser. Whereas if you say, well, I'm open to all outcomes, including left translated, right translated, mid translated, and an early rollover and a die. If you're open to all outcomes and you take it one day at a time, you can't really lose. And that's all it's about. It's not about being right. It's about staying on the right side of the trade. So set yourself a challenge, right? Set yourself a challenge. Can you identify any of the failures you've had over the past? Do they fit inside of these frameworks, right? Were you trading without a hypothesis? Were you certain of one outcome only to not see another one show up? Were you looking far too far out in the future and didn't notice technical breakdowns or breakouts because you weren't taking it one day at a time? Really ask yourself these questions, right? Really see if you can process this. And if you can, right, notice how liberating it is. Notice how nice it is to know that actually it's better to control the things you can control, such as which assets you move into and when, such as how much size you put on, such as how much risk you are willing to take, how much account drawdown you're going to suffer if you are wrong. It's far better to focus on controlling those things rather than say, well, I know the exact price and the exact date that the market's going to top, so I don't need to worry about anything else, right? So I really hope you'll consider this. To everyone that's been part of this community and has helped me and helped each other stay on the right side of the trade, big thank you and a massive shout out. I'm sure we're going to continue to absolutely smash it over the coming days, weeks, months and years. And we're going to do that not because we have a need to be right, but because we have been able to master these basic principles to control what can be controlled and to relinquish control over that which cannot be controlled. I'm your boy Camel. I hope you found value here today. I hope you consider what I said. And I hope you continue to let me know if you have any constructive criticism in the comments. Until next time, I hope you're doing well in life. Take care from me. All the best. Cheers. Bye.